Okay, so last week we didn't have much happening on economic calendar. I've mentioned for you guys this last week. So we only had what was very important was, as I mentioned for you guys already, on a YouTube video from ACY Securities channel. If you're not subscribed to there, please give us a thumbs up on those videos, because we put it up a lot of good content, especially this one. That is what I'm going to talk about today. That's New Zealand flash update, hedge fund gains, giants shift gears. So they were long on NZD, now they are short on NZD. All right, and we're going to find out why they are shorting New Zealand dollar. So this is our channel. All right, you can subscribe to it, you can give us a thumbs up and get these bell notifications up, though every time we post a video, you don't miss. All right, okay, so before we go further, let's have a look on the economic calendar now. I see a few people joining on our Telegram, so this is really good, really nice to see. We got 37. Let's see if we can get 40. So we were at 30, 33, I think, when we started the webinar. So if we can get a few more people to join, that would be lovely until we get 40. So if you haven't joined yet the Telegram, I'm going to share again the link here on the chat, and you can just join in there. All right, guys, let's go. First of all, let's have a look on what's happening with the currencies I've mentioned last week. So primarily we had a look on the US dollar. We had dollar index. We had a look on the yields and bonds. And then we had a look on major pairs like euro dollar, pound dollar. Very nice. Pound dollar, we saw that pound dollar is doing what we had predict, somewhere around here. Same as gold. Someone asked me about gold up here, and I've mentioned that we can come further down to somewhere this area, and indeed we came in. So that's very good. Now moving forward, what we can see from the market is that what is actually mattering for the market is the Fed, right? So the Fed is the guy that it's matting the most for the Fed. For the market. So if we look at the bonds, I want to bring attention to something that not much analysts are, well, I wouldn't say not much, but mostly the analysts are not looking at, is that the Fed mentioned, before we go there, I want to have this open here as well. So they mentioned, the Fed mentioned that if the higher bonds persists, above 5%, so we're talking about the 10 years and the 2 years bond, if they persist above 5%, then it would be quite, how can I say that, dangerous? Not dangerous, but wouldn't be correct, or wouldn't be, necessary to the FOMC raise another 25 basis points. So as we can see, we have the 2 years bond at 5%, and we have the 10 years bond at 4.6%, right? So that's a big difference from 5%. So keep watching those bonds, guys, until 13th of December. So if you come here to these two, I'm gonna give you guys the link here, because lots of people always ask me for what are the tools you're using, so this one is the CMA Fed Watch 2. You can play around later, but basically the main part I look for is this guy here, the target rate, and I click on current, and then I go for the next meeting. So we can see here that the next meeting will be on 13th of December, and there's even like a nice countdown here. So there's 29 days, 11 hours, 40 minutes, and the seconds for the next meeting. So the next one will be on 13th of December. And here is the important, right? Here's the important. Before last Friday, yeah, that was last Friday. Yeah, not this one. So not this Friday here on 11th, but on the 4th, we had FOMC federal, Jerome Powell, the chairman from the Fed, came into the media and telling that it may be, able to raise rates because it's not on sufficiently restrictive levels yet. This sounded a bit hawkish for the market, all right? In what way? In the way that, first of all, it wasn't a, FOMC meeting, okay? Let me make it very clear. It wasn't an FOMC meeting. It was a panel of questions of monetary policy around the globe. So what they mean about this is, so if you can actually, I'm gonna send the link so you guys can watch it later if you want. But basically is Jerome Powell, not live today. Jerome Powell speech on monetary policy. Was this one? Yeah, this one. So, all right, so just pay attention. It's a very small.
To better balance.
Have a look on here.
GDP growth in the third quarter was quite strong, but like most forecasters, we expect growth to moderate in coming quarters. Of course.
By refusing to treat climate change like a systemic risk
thank you.
You are putting us.
Thank you very much.
Right, this is just a joke. All right. This is just a joke. What just happened on a panel of questions on a policy discussion, monetary policy discussion. All right, so basically we had, I'm not saying what they are protesting was a joke, but what happened with a very important meeting was very, very like, wow, it shouldn't happen. So it shows how the security was weak at this event. But I think it was 4 or 5, I'm not quite sure. I think we saw 4 people up on the stage, but there was another one that couldn't get in. So I think it was 5 in total. Activists from global warming got into the the speech when Powell was starting to speak, and get done all the drama that they always do. I think those things are going so far away from reality right now that this may sound not even this may sound normal on those in the society we're living right now. But anyways, so on this speech here, right, I'm going to send you guys the link. Powell gave us a few hints on what to expect from inflation that we're going to have tonight. I want to talk that about later. I want to talk about that later. But pretty much this was why the US dollar index gave this up move here. Where is it? Here. Why we had this up move here. And this whole, momentum up. Now, my target for the US dollar is to, further movements up. So I'm still expecting a little bit more strength towards the US dollar to somewhere here. Because if we look, we're still kind of in a range. I don't think this it's a break of this range. Still, the market is expecting, still waiting for data, especially tonight. We're going to have the CPI. So if we come here, we can have a look on data. will be, oopsie, that's not my time zone. Canberra, Melbourne, here. So we're going to have the core CPI expected to be 0.3%. Oh, look who's here. Expected to be 0.3%. And the CPI year over year expected to be 3.3, and the CPI month over month is expected to be 0.1. I think these plus we have a few other things going on as well will influence the trajectory of the US dollar throughout this November until end of the month. So I still see room, to get a little bit move upside, but only if inflation comes at as expected or 0.1% higher than expected. All right. If it comes lower than expected, then it would be a pretty much not would affect these, not would affect that much, because afterwards the market would return the movement. But it still it would hurt a little bit the buyers on the bullish the bulls on the US dollar. All right, so if we see higher, then it's it's going to be perfect. I'm going to still longing US dollar. But if we see lower, then I may have to give a step back and analyze the whole thing that is going on US. But it's still, I think US has a lot of potential, continued through the end of this quarter, especially for the first quarter next year as well. It's still a little bit of a more accentuated uptrend. I'm not saying that it's going to shoot up, but it's still a little bit more of a accentuated uptrend. I do believe that. All right. So these are my beliefs on the US dollar. Now, moving forward, I'm going to talk about gold as well right now because, oopsie, lots of people ask me about gold. So what's happening here? Okay. Lots of people always ask me about gold. So I'm going to talk about gold. I got a friend that he got a short position here, and another one here, I think, but he closed it out. So to be honest, I see potential to upside on gold. Okay. We did reach a certain area right now where, some people can judge as support, because we had a touch on here, here, and then now here. But I think if we, if we don't have strength to continue this move towards this area somewhere on here, then we may continue to head down towards this other area here, all right, towards the 1920, most probably, all right, 120, yeah, somewhere on 1920. I think this may happen, especially if, as I just mentioned, we need to have a look on the CPI tonight from US. If the CPI comes higher, then definitely gold would be heading down. But both of the CPIs had to come higher, right? So then it would impulsionate the US dollar. If only the core CPI comes higher, or if only CPI year over year, or only if CPI month over month comes higher, then it would have a much impact because it would turn it out even on the market, right? So just pay attention to that, guys. Now, pay attention as well when the CPI gets out tonight on these numbers, all right? So 85.7% of the market, I'm talking about professional players here, guys. I'm not talking about any, normal guy taking a server. What do you think about this or that, right? So I'm talking about professional people, and they are expecting the Fed to pause again on 13th of December. 85.7% are expecting a pause. Now, the remaining 14.3% are expecting a hike. All right, it's no changes means pause again, and hike means hike 25 basis points. All right, so we can see here 550 to 575. The 550 would be the higher band here. We turn it out 25 basis points. Look, if we have high inflation, I think that's quite possible. But especially when the Fed, especially when Jerome Powell came here on the monetary policy discussion panel on the 11th of November and mentioned it about that, rates may not be on restrictive levels yet, then yes, that would definitely bring some strength to US dollar and occasionally make gold heading further down. All right. So that would be my take on gold. So pretty bearish on gold for the moment. All right. Now heading for euro dollar. Okay, euro dollar is kind of tricky because this is 4 hours. Okay, because we did had expectations, to come to the lower bands of 104. Indeed, I was wrong, and I have nothing to hide you guys. I think as a professional, I do get things wrong as well. What matters is my risk, my ratio, what's my exposure to the market, how is my hedging, and so on. So indeed, but you guys can't forget, I was wrong. Yes, I was wrong for this bit here, right? But I was right for this bit here. Okay, I'm not claiming myself, but I'm just showing that we need to look at the longer term, right? We did make good trades on here. We did make good trades on here. We did make good trades on here. We did make good trades on here, but we lost here, right? And that's fine. I mean, do I care? Yes, I do care, because it's it's a capture exposure of my portfolio. But what do I have to do? I have to know why I got it wrong, and that's it. And why did I got it wrong? Because I wasn't predicting a shift on the central bank's monetary policy. So the rhetoric from Europe, it's been more hawkish than rhetoric from the US dollar. But I'm still believing, that the US dollar will continue strengthening from, as I've just mentioned, from last quarter of this year to first quarter of next year. But it's inevitable that US will enter into recession at the second half of next year. And as well, I'm thinking, I'm analyzing that that's maybe possible for them to cut rates into quarter 3 or quarter 4 of next year as well, 2024. All right, starting at 25 basis points, probably most likely 25, but on the higher band, I would say 50 basis points at next year. Okay, if we look at the dot plot, where is the dot plot? Where's the dot plot? Where's the dot plot? Here, chart. Load. Go. Okay. So if we look here, 2024, 2023 on these ends here, let me grab my pen. Not white. I want red. Okay. So if we look here, that's the end of 2023. Okay. So let's draw. I can do it better. No, I can't. That's all right. I thought I would have the what's the name? The thing. Anyways, I don't. But so if we look here, the comfortable dot plot for the Fed would be between 5.5. Okay, so if we look here, most of the members voted at 5.5, and only 2 voted at, let's say 5.75, and only 1 voted at 6 above. Okay, so we can see that's pretty much from here to 2024, most likely everyone is expecting to be at 4.35, 4.4, let's call it. Okay, so the majority is expecting here. All right, so the higher bands are on this area, and for this year, the majority is expecting to be as it is, unchanged from now on. So to be quite fair, guys, that's the only thing. It's oh no, Okay, it's tricking me out right now because when I come here and look at the dot plot, seems like it's done. And the probability of these two guys being right, it's you know, we have 3 people on the top, we have 3, 6, let's say 7, 8 here down. So the probability of those 8 people being right and these 3 people being wrong, it's much higher. All right. So I'm expecting that, still expecting another 25 basis point, but again, we'd have to watch the inflation. All right, now moving on, too much US dollar. Let's go. Oopsie. Okay, so now moving on for the euro dollar. What's the chat? Can you explain why NZD will be short? Yes, I will. Could you check the asset managers or leverage funds for positions caught euro dollar? Yes, I will as well. That would be my next thing. I'm just keeping, keeping it for the end. It's very cold at the office. Jesus. Okay, so now euro dollar still in consolidation. All right. Not much happening around here. Maybe we have, most of the institutions are looking to year end on euro dollar at 105. So there are potential for a trade there. All right, there are potential for a short trade there. Just not sure where could we take the short position on euro dollar at the moment. All right, so towards euro dollar at the moment, I'm quite neutral. All right, so I'm not gonna have you guys any direction or my thoughts on that because I'm neutral, and that would be it from me on euro dollar. Now, turning around for GBP USD, we are having a very strong push to the upside here right now. If we break these highs, then we can, push towards these highs here. And this indicates me that the market is maybe thinking that inflation will come lower into tonight. All right. So just a heads up on that. But if we're not able to break above here and inflation comes higher than expected, then definitely we can head it down here. But I was right on this trade here. I call it you guys last week from this top to here. All right. So that was the trades from me last week that I've closed yesterday before I go to sleep. Right. I'm just going through kind of, not rushing anything, but just going through things I can. New Zealand dollar. Yeah, New Zealand dollar is good. New Zealand dollar, I have a short position. I've engaged a short position somewhere here today. This is not investment advice, please. I don't have the license to do it yet. All right. But I'm studying for my CFA. Wow. Congratulations for me. Hopefully I can get it done. If any one of you guys are from finance or know certifications from finance, you know how hard is the CFA, and you know how difficult it is to study CFA. Hopefully I can get it. And this, I'm always thinking to be a better person and to bring better content for you guys. So hopefully I can get it done and bring, much wider visions on the market, equities as well, alternative investment derivatives and so on. I would be very, very happy to, be able to talk about those things with you guys. But from now on, we keep on Forex and a bit of commodities. Okay, so still, I have a short position here on New Zealand dollar. Right. That's what everyone was expecting. All right, let's go. So let's go to the two I use. It's called a Prime Market Terminal. Let me stop sharing my screen just to log in here. Are you guys liking it? Is that so far so good? Please give me feedback. Yeah, cool. All right, good. Let me share my screen now. That's so low. Okay. Nice. Thank you so much. Okay. Close this. and close this. And let me open this. Okay, guys, don't lose your heads. It looks very complicated, but it's simple. Cool. Nice. Thanks, Aniwani. Sorry if I pronounced your name not right. Okay, let's go. Let me take a zoom off from here so we can see everything. Hopefully you guys can see it. So basically, what's the COT? All right, what's the COT? COT. What's the COT? Oof, let me turn it off this aircon because it's very, very cold in here. Wow, that's cold. All right. So coming back now, if we look at here, it may sound so complicated, but the COT is basically abbreviation for the commitments of traders. All right, let me share a whiteboard, and then I can give a little lesson for you guys. So, okay, I'm going to delete this. So the COT equals to commitment of traders. Okay, so basically, the COT show us what the leverage funds, what the dealers, intermediate dealers are doing. We have buy side and sell side of the market. All right. Does anyone know what's the buy side or sell side of the market? So just please send a comment. If you guys don't know, I can just quickly try to explain it before we go further. Let me see if someone sent it. Not very sure. No. Okay. All right. So we have two sides of the market. Okay. This one, but I want black. We have the buy side and we have the sell side. Okay. So we have buy side and we have the sell side. I'm not going to go too deep into it. I'm just going to very briefly. So the buy side and the sell side, they are both players in corporate finance, okay, or whatever, or investments or so on. All right. So sell side includes the firms selling financial products to the buy side firms. All right. So basically, a broker can be considered a buy side and sell side at the same time. So ACY Securities can be a sell side, but it can be a buy side, just depending on the product. But at the moment, we are a sell side. So we are selling market for you guys, and you guys are buying market from us. But here we have big institutions. We have JP Morgan, we have Goldman Sachs, we have those kind of institutions. And here we have retail industry. So pretty much this would be, okay, so we are here, oopsie, we are on this side of the market, right? And the big boys are on the buy side. So pretty much the commitments of traders show us what both of those sides of the market are doing. Okay, and then it presents us on what are the changes, what are the net percentage changes that have occurred from one week to another. So the release of the COT is weekly, all right, and the organ that, not organ, the institution that release that release the data is the BLS. It's not what you guys thinking. It's not BS. It's BLS, and that stands for Bureau Labor Statistics. Okay. Okay, so the commitments of traders, release of the COT weekly, institution that release the data, it's the BLS, the Bureau Labor Statistics, and most importantly, this is public information. All right, so public info. So everyone and anyone from anywhere can have access to this information, right? So there are, of course, you know, from someone sent a message, let me check. Buy side are large corporate and sell side are speculators like institutions. Correct. Thanks, Lawrence. And then we have this as public information. So basically, it's what we're going to look at. What we have to pay attention is the net percentage, right? So we're going to have a little box, call it net percentage. All right, so let me draw it. So net percentage, right? So this is what we have to pretty much pay attention, is the net percentage. And we're going to have, of course, from last week to this week. So here it's going to have divisions. So let's say there's only 4 weeks. So here we had a negative 8% net percentage. And then here we had on the other week, negative 8.5. And then we had a 7 negative, and then we had a 1. So here we had a flip. So this is called flip. All right. So from here, we call this COT flip. Okay. Call this COT flip. So from oopsie, what's happening? What? Oh, there we go. So we call this as the COT flip. So we had last week, so previous week was negative 7%. So what does this negative means? Well, it means basically that negative, so let me draw this here. So when it's negative a number, we call this negative, where is the color? We call this as shorts. Okay. So when there's a negative before the number, it's short. So this currency is being shorted by the leverage institutions or whatever institution you're looking on the table. We're going to have a look on this later. If it doesn't have, so if it has, see, if it's like just this, without anything on here, then is a long position. So that's pretty much the COT, right? Not going too further because it can be very, very detailed. I don't want to go that much. This is more than enough for you guys to be able to use the commitments of traders. So if we look in here, we can see who is the where is my thing? What's COT? So it's the commitment of traders. The release of the COT is weekly. The institution that does the release, the data, is the BLS. It's the Bureau of Labor Statistics from US. Okay, and it's a public information. How can we read? What we have to pay attention is the net percentage on the table. And we need to pay attention if increasing shorts, like here from negative 8 to negative 8.5. So there were a 0.5% increase on short positions, or if it was a decrease on short positions that they are not more interested. So they are taking off those short positions throughout the time. Or if it's positive. So when it happens a flip, so when it happens from negative to positive, or even if it's positive to negative, then we call it a caught flip, okay? So if we have a caught flip, then we would have to, let's say on this case, the strategy, says to us that if it has a flip from negative to positive, we would be looking to long the currency against all the weaker currency, all right? So of course, if it has a positive to negative, we would be looking to short the market through long the market, short the market through other currency. All right. So now let's have a look on actual examples. Let me share my screen. So far, so good. Everyone cool? Let me know so then I can move ahead. Any questions? All good, thanks. Cool. Nice. Right. So going through here, right? If you guys want, I can show you how to do it. You don't have to sign up to anything. You can actually do it by yourself, all right? But of course, you would have to do it every week. So you need to come to here, Boreal labor statistics. You would have to come on here, and then you would have to download it from data tools, commitments of traders. Anyways, you guys would have to come here and do everything. All right, I just don't want to lose time because I don't do it a long time ago, but I still can do it. Anyways, I can teach you guys next week. Only focus on that. But everyone has to agree because majority has to agree. So then I can teach everyone how to do it. Otherwise, it would a few people would join and want to learn it. So just put in the chat if the majority agrees. We have 22 participants right now on the live. So if let's say 11, 12 people say yes, then I definitely do it next week. The COT, 100% focus on the commitments of traders. All right. Just make sure you have an Excel sheet on your computer, and that you have access to US websites, because some countries don't let you have access to US websites. So that's pretty much what you need. All right, so send it out and then I have a look later. Okay, so here we can see we have the COT and we have few options. We have the dealer intermediary, we have the asset managers and institutional, we have the leverage funds, we have non-reportable. We don't have to care about the non-reportable because what basically matters to us is the leverage funds, okay? Leverage funds would be those people that are actually speculating on the market to make profit for their clients. So hedge funds, pension funds, or whatever, you name it. So people that are on the market not to be around, they want to be there to make money. This is the leverage funds, and this is what we are looking at because we want to make money as well. So we want to have a look on what those big boys are doing, all right? So from here, we can see the date, all right? So from every week, so 24, and then 31st, and then 7, and then so on, we have the release. So weekly release, as I just mentioned. We have the open interest, long change, short change, spread change, total positions, and then we have the net positions that it's not what we want. And then we have the long percentage, short percentage, spreading, and what we want, the net percentage. All right, so let's have a zoom here. Okay, very white. Right, so if we look at here, we see from the 31st, let's look at only those last two datas. So from the 31st to the 7th, so the 31st of October to the 7th of November, we didn't have much change. We came from, this is AUD, all right, we can see here, Australian dollar, that's leverage funds. We came from negative 8.6%. to still negative 7.1%. Right. Why did it had an increase, actually a decrease on short positions? Well, because we can see that from here to here, we had an addition of 2 long positions. So they added up 2 long positions. So we were on 18 long positions, but we came for 20. So then the percentage, of course, will change, but the short positions haven't changed a dot. There's still 30. Okay, and the total trades are 50. So 30 plus 20, of course, 50. All right, so this is pretty much what we're looking. So these show us that the leverage funds are slowly putting up some long positions at this level of the market, you know, on the day that was released throughout the other week, you guys can see my screen, right? Because yeah, you guys can see, because here shows basically, you know, slowly adding position up, and but they haven't mentioned, they haven't changed anything from here. But if we look on let's say CAD, the Canadian dollar, on leverage funds again, last 2 weeks, last 2 dates, from the 31st of October to the 7th of November, we had here net percentage from negative 15.8 to negative 17.8. It didn't have a change, right? Well, let's have a look on why it changed to more than what it was. Well, if we look here, it was 15 long positions on the 31st and 33 short positions on the short side. Then they added 4 positions on the long side of the market, and they took it off a few positions on the short side. But the spreading are higher now, so it's costing more for them, right? Again, I don't want to go too deep into that, but the spreads are going high and it's costing more to them. So then, of course, it will identify the short positions, the long positions, and they have to add more short positions. Okay, so again, this is a more complex example, but let's have a look on New Zealand dollar. Where is the here? Clear all drawings, take this off, take it off. Oopsie. New Zealand dollar here. Okay, so if we look on New Zealand dollar now, same thing, last 2 dates, from the 7th to the 31st to the 7th, all right? And we look at the net percentage, we had a flip. We came from 8.2% positive to negative 1%. So what is showing us? Here we can see leverage funds, New Zealand dollar leverage funds, right? So what it can show to us is basically that they closed 4 positions on the long side, but they maintained a quite few on the short side. So it's of course it's balanced, but it's 2. They've closed 3 here, but they've closed 4 here, right? 16, 17, 18, 19, 20, 5 here, sorry, 4 to 5, anyways. So they are negative 0.1%, negative 1%. So these basically show us that New Zealand can start to, you know, feel some weakness throughout this week. And this is why I shorted New Zealand dollar against US dollar. If we come here, I can go to the 15 minutes. Let me see where is my actual position. Let me grab, can't show you guys that, but let me grab it here. So my position is at 58,809. 58,800. So here's my position. My take profit is at 58,300. So This is the position I've built this morning. Okay. Again, I'm very cautious about this. Before the as a trader, my main job is to protect my capital in volatile markets. All right. And we're going to have a very volatile event tonight. So the main reason why I'm doing it, I'm gonna place my stop loss to my break-even point. I'm glad I could have this move down, you know, this morning, so then I can run this position risk-free. So that was the main reason why I've shorted New Zealand dollar against the US dollar. Now, if I would like to play safe, let's have a look on what else we have oh, forgot to mention this as well. Here we can see that, oopsie. Here we can see that on this line, where is the thing again? Jesus Christ, I'm so bad with technology. I don't even look like I have 21. Yeah. Okay, so from the 31st to the 7th, we had a huge increase in percentage. 8, 9, 10, 11, 12, 13, 14, 16. Nearly 100% up on US dollar, right? So this shows me, what does it show, guys? Let's see if everyone was listening when I was explaining. I want you guys to put in the comments. What does this show to us? An increase on long positions on US dollar. Long it? Yeah, I can't say for you to long it, but the strategy it's, you know, says that there are possibility for long positions on US dollar because the interest on the long side of the market from leverage funds are increasing from 1 week to another, and it did increase 50% up. So it shows us sentiment is long. Correct, Steve. Good one. So it shows us basically that the New Zealand dollar is changing to weaker. All right, and that the US dollar is changing to higher perspective into long positions. So voila, we have a trade on New Zealand dollar against US dollar. So this is pretty much what I've been observing this morning to show you guys. Now, if we have a look on the other commitments of traders, haven't had any change from CHF, from euro, and from pound. We didn't have much on euro. We didn't have much, sorry, on pound. We didn't have much on euro, and we didn't have much on Swiss franc. Okay, so here, if you guys want to take a look. All right, so that would be pretty much it. Now, again, pay attention on the US dollar CPI tonight. If it comes, you know, what if your CPI comes negative? Does COT change to long? You mean to short, right? If CPI comes negative, then the US dollar would likely change to short on the commitments of traders, but we would only know next week. So this is the only downfall for the COT, the commitments of traders strategy. Right, so again, just pay attention on CPI, and I think yeah, it should be fine until tomorrow. All right, guys. Okay, so I'm having a look at the chat. Seems like I'm gonna have a, yeah, I can do it this next week for you guys, how to do it. So just make sure come with your Excel ready. It's not out of the board. We're just gonna have, you know, lots of download files from Borrow Labor Statistics. So just make sure you have a space on your computer, and I think should be good. All right, so that's all from me today, and I see you guys on the next Tuesday, so we can build it up our commitment of trader strategy. Hey, it's gonna look much cooler than this. I'm gonna make sure today. No, he's not. he's built up his strategy on based on what I've said throughout the webinars, and it's just incredible. It's just incredible. All right, I'm not going to show because he's not here, so I don't have his permission to that. But we see next week if he can, if he let me show it. All right, guys. So this is pretty much all for me. I see everyone next week. Again, this is the Telegram link. So if you have any questions, please don't hesitate. And again, be careful with those fake accounts on or ACY securities. All right, guys. See you all next week and have a lovely trading week ahead. Bye-bye.